Hi there, Evan here with Crypto and Markets for Sunday, January 7th, 2018, with a quick video here on the flattening yield curves in both the US and Canada. I know this hasn't been a topic you've heard much about in the mainstream business media, but for the last 6 months to in fact about a year, it has been occurring. In the US, the 210 spread, which is of course in any economy the main spread that's used by the banks for lending, is down to roughly around 50 basis points right now, whereas in Canada it's down to about 40. Of course, as the central banks have hiked rates, growth hasn't been there, so the 10-year yield hasn't gone up that much. The ratio now is very small. Of course, in the U.S., what's the reason for the flattening yield curve? Well, of course, as I mentioned in previous videos, we are in a low growth world, so even in a rising rate environment, you can't expect long-term rates, which are, as I mentioned in previous videos, are the most sensitive to growth rates. Haven't really gone up that much, but the short-term bonds, because of the Fed tightening, have gone up a lot. For example, in Canada, the 2-year yield's gone up 110 basis points this year, and the 10-year's only gone up 40. Now, of course, by the numbers, again, a lot of you don't want to hear this, but the Canadian economy has had a pretty strong year. And again, I don't think the economy underlying is that strong. I'm just going by the numbers here again. Now, of course, in Canada, because of the real estate bubble we've been in, really, I would say for at least the past 15 years, we've had this big, massive buildup in credit, and hence we're probably about roughly 70% more indebted right now than the US, give or take. And obviously, of course, it's been defined. Steve Suretsky had a great article on this about a few weeks ago, but the rapid growth in home equity lines of credit, which people are, of course, using to spend out in the real economy. Now, the reason why long-term rates in the US have stayed low is because, again, they're in a low-growth world, like pretty much the rest of the world, it seems like, except for emerging markets, well, barring the last couple of years, but even then, they really, even during this recovery, haven't had big growth in the consumer. Real wage growth hasn't really been there like other recoveries. Hence, you've seen the low end stay actually go from even a higher rate than it was before. I think at peak it went down last year to around 1.5. It's around 2.45 right now, but again, the decline over the past 30 years has kind of shown the deceleration in growth rates both in the US and around the world. Now, again, the US, where they're going to have problems. Again, of course, they had the tax cuts recently passed, so I think they'll have enough to stave off this year. But in 2019, these problems with car loan defaults starting to come on and credit card charge-offs starting to go up. Again, 2019, I think that's going to be the year where it's a problem for them. Can they stave it off? Again, we'll see. The problem's already started, so I don't think they're going to be able to. But again. But as for Canada, we see how indebted we are as a nation, really. How much borrowing we've done, really, to live, to be honest. If we've had this great economy this year, why isn't the 10-year yield gone up higher than what it has? Even the bond market kind of basically sees what's about to come, right? Again, this is where the big problems are going to come for both Canada and the US. It's when the ultimate inversion is going to happen, where the 2-year is higher than the 10-year, and the credit market completely seizes up. Again, I've said this before, I'll say it again. It's usual in every recession there is. Central bank always overshoots, credit market tightens up, economy goes this way. Now in Canada, of course, we're already so far in debt. I think we can pretty much both agree we're in a lot of trouble because of this. That's, I think, where we're headed. Do I think the Bank of Canada goes in January? Again, you be the judge on that. Are they going to overshoot no matter when they raise? Yeah, most definitely. An economy that underlying has very little growth when you're raising interest rates. We can all see the problem there, obviously, right? I mean, you could be a 10-year-old, honestly, and figure that one out. And then raising rates too much, of course, leads you to the inevitable financial accident. And obviously, we all know the ending. That's especially where it's really going to get bad. You have to remember, especially too, we're an economy that's really been predicated on borrowing, really for at least the past 15 years, right? So when the yield curve ultimately inverts, how it works is it usually takes about a year for the credit market to really, really, really start tightening, right? And the credit market really starts tightening, and people realize, oh, I don't have the money for my to run really, really my regular life. That's why it's really going to hit the fan, right? And of course, with Toronto being really down since the foreign buyers tax was put in back in April, I mean, listings keep going up and up and up. And now, of course, you have the new stress test put in, which, again, I think are going to have unintended consequences for the housing market, especially for the first time buyer. You can see where all this culminates, right? Credit market seizes up. People can't borrow to go out and fulfill the basic necessities to run their families and whatnot. And they leave it in too much debt. They're in a house where the underlying mortgage is worth more than the house at that time. That's, of course, when the foreclosures come and the pain really starts. And even the bond market sees this, right? The reason why, of course, the 10 year is not going up is the 10 year is the bond guys, the fixed income people know this. To have a higher long term rate, you need better growth. Underlying, if you take out the credit markets, it just isn't there, right? So again, that's where they're kind of coming from this. Now, where do I think it's going to go? I think 2018 is going to be the start of the real decline. In 2018, 19, sorry. So 2018 started the decline. In 2019 is when the pain's going to come. The foreclosures start coming hot and heavy when people realize they can't run to the bank for more money. They can't fulfill really their regular everyday lives. And they're in a house that's not worth what they're paying for it. In the same playbook, 2000, when the pain started coming in 2007, 2008 in the US, it really is the same game plan. So to put it in closing, the real barometer for future growth is the yield curve. And the more flattening happens, which inevitably leads to the inversion, that's when the real pain starts coming. And thank you all for watching. I'll go ahead and leave it here. Hit the like button, dislike, I don't care. Leave a comment down below, and subscribe to my channel for more reports like this one. Have a wonderful day, everybody.